Hello, everyone. Welcome back. It is Tuesday, time for another video. This week, I want to start off with this quick headline here from CBC News. A wave of defaults has real estate lawyers urging pre-sale buyers to be cautious. One man lost his $82,000 deposit despite a contract option to transfer to another buyer. So, of course, that article is talking about a pre-sale or a pre-construction unit that was purchased by somebody. In this case, the guy was actually going to move into it supposedly, and he couldn't sell his place back in his home country, and of course, he couldn't transfer it. There was problems anyway. The more normal situation would be speculators that have purchased that didn't plan on closing on these units, on these pre-construction homes and condos. And of course, closing time is coming or is here, and they can't close because it's not worth what it was supposed to be worth. The appraisal is not coming on value, or they can't get financing because of the higher rates. Anyway, they didn't plan on closing. They just planned on selling it for more than they bought the contract for. I've personally received numerous calls over the last 12 months, not from my clients, thankfully, but from just random people. I think they get my name and number, maybe from the videos or from Twitter, and ask me what to do. The most recent one was last week. A lady had bought a pre-construction home with her sister in the Niagara region for it was around $1 million, she said, and the appraisal came in at 850. They couldn't make up the difference. They already have $100,000 into it, but it's worth $150,000 less than they paid for the house. They can't close on it regardless. They're asking me for advice. It's hard. I can't really give advice at that point, especially if there's another agent involved. I told her to contact a lawyer, and I gave her a recommendation for a litigation lawyer that deals with real estate. So things are getting pretty messy, and they have been for a while. But again, we're going to continue to see this into 2024. People that shouldn't have bought these properties and can't close on them, which leads me into my next topic of conversation on the same issue, whereas like, what do these agents say now to the people when they come back? If you had sold a pre-construction unit, prices are always going to go up. Whatever claims they made, not all of them made these claims, but many of them did, saying, look, you can't lose, it goes up, just sell it before it closes or assign your contract. What do they have to say when the clients come back? Do they just not answer their phone? I don't know. I'd like to know. I'd like to hear these conversations. Even myself, back in after, say, 08 into 09, 2010, I'd have some buyers that would call me back. They needed to sell for whatever reason. And these were not investor clients. These were just normal families. And anyway, they need to sell. And of course, it sucks when they come back and their house is, worth less. Uh, Back in those days, it was worth $5,000 or $10,000 less. So not the end of the world, but still they're losing money, and they're not happy about it. And these people were not made any false promises that real estate only goes up. These were just people that needed to buy a house, and they bought a house because they wanted somewhere to live and they couldn't afford to own it anymore. So recently, I put the question out on Twitter, on X, just to see what the public had to say. Hey, agents, if your clients are calling you and asking to sell their recent investment you sold them and they're worth 100 to 500K less, you either gave them bad advice or they made a bad decision, or a combination of the two. Markets don't always go up. And of course, the reason I worded it like this is because, still to this day, people say markets only go up, real estate's the best investment, or you're going to break even or double in price after 10 years. And it's not always the case. And we're seeing that now. So just a few replies from some of the other users on there. This is from Sven. It's like an investment advisor encouraging margin of 70% to buy stocks because they always go up and will cover the interest costs. Firm would fire you. Of course they would. I get comments like that all the time. Like, this would be illegal for an investment advisor to tell people just buy this. It always goes up. Like, they would. It's against the law. So, but realtors, they've told many people, hundreds of thousands of people, to do this, to buy these things. They always go up. And you see it today. You can go look anywhere and look at agents making this claim that real estate always goes up. And it's kind of a vague claim because they're talking about the long term. They're talking about 10, 20, 30 years from now. From Lenflood, my realtor was well aware. He told me people are going to lose their shirts. Luckily, I was selling my house. I agreed with him. The market was insane. So you're lucky you were on the selling side of the equation there, because I'm sure the buyers, they're probably not too happy right now, and maybe they're okay, but maybe they're not, right? Depends on their situation. From House Inc. It's funny because when it comes to financial advice, there can be lots of accountability for issuing bad stocks, etc. Wonder if there will be a wave of lawsuits coming for people giving, well, bad financial advice. And that's a good point. I'm sure there would be ethics problems or ethics complaints, but yeah, that'll be interesting to see what happens in the future. And this last one here, I just wanted to read this because people they like to call me out on it, and it's a good question, mind you. I'm not trying to be standoffish with this guy. So Henry Hill says, "You didn't have any sales over the last 3 years. That explains a lot." So of course I sell homes. This is how I make a living. I make a living from selling homes primarily to families. I have sold a few investments. That's not what I focus on. Be very few and far between, mind you, over all the years I've been in real estate. But I work with families. This is who I enjoy working with, and they're making sound decisions based on advice that I would give them. And my advice would not be that the market always goes up. Don't worry, just buy a house anytime. During the 2020, 2021, 2022, and these insane years, even back in 2017, for a lot of people, I would say, be cautious. The market is going to correct at some point. Be prepared and don't leverage yourself too much that if something happens, you're going to be in trouble. So yeah, it's all depends on the situation. During 2021 and 2022, luckily I worked with a lot of sellers, so it didn't really matter. It didn't affect them. They were all happy. They were making money, and they were selling for different reasons. There could have been retirements, or people moving to old age homes, or just people upgrading their house or selling. Maybe they did have an investment that they were selling. And even now, like in the last 6 months, you might be watching, like I have sold homes to first time buyers. They come to me and they say, look, I want to buy a house. And yes, I watch your videos and I know that you're the cautious tales you tell. And of course, we look at their situation and they have good down payments and they're in a good situation and it makes sense for them to buy. They're not worried about the price going down at their price points too when they're spending, on the lower end of the spectrum. They're not worried about prices going down 50 or 75,000 on their purchase because they're prepared for it. They have a good down payment, good jobs, and they're stable. So in that case, yes, they want to get into a home. They're sick of renting and they're ready for it. It makes sense. People upgrading, downgrading, it makes sense. But again, you still have to explain that, yeah, you may buy this house and it may be worth $100,000 less, but the house you're in right now is going to be worth $100,000 or $150,000 less in that same time frame. So again, it doesn't affect those kind of people, but people entering the market, they have to be very cautious. And of course, speculators, which I don't work with speculators, but speculators, it's a risky business. And now you're seeing those risks. It's not always the rewards, and we have seen big rewards. And now comes the risk time. And of course, there's going to be a lot of unhappy people in these times. So I do have some statistics this week, but I'm going to save those to the end. I'm going to get into the next thing, which kind of is a continuation of what I was just talking about with speculators and investors and whatnot. So I was going down this rabbit hole, or I entered this rabbit hole, and it just kept going. And I said, wow, like this data is amazing. So what I was doing some research for some clients in the region here, and I noticed there was a lot of places for lease in the area they were looking. So I started to look at other areas, and these were newer areas, to see, okay, what does it look like in there? I see a lot of places for sale, but you also see a lot of places for lease, meaning there was a lot of investors in these neighborhoods. And these are primarily new neighborhoods where the ratio gets really crazy, but in all neighborhoods, there's lots of places for lease. But anyway, let me show you what I'm talking about. So this is right on realtor.ca, and these are the same area, but one is for sale and one is for lease. So here we have in this small little section of town here in the Niagara region in Welland, we have 15 places for sale. And in the same location, we have 32 places for rent. So there's twice as many places for rent in this neighborhood as there are places for sale. And again, these are all primarily new construction units. So tons of investors have bought in that neighborhood. And of course, that answers the question, where's the inventory? We need more inventory. Well, we had lots of inventory, but it's all up for lease right now. And here's the next area. This is in Thorold in the Niagara region. Lots of new construction in Thorold. And of course, there you have 19 places for sale and 32 places for rent. So again, the ratio of lease to sales is it's far outpaces. It's almost double, not double, but it's pretty close. And here's yet another place in Thorold. This is one of the bigger communities that has been developed, and this would be obviously the most recent phase that has been completed. And there you have 24 places for sale and 49, so more than double, 49 places for rent. So tons of investors and speculators, or whatever you want to call them, in there that have bought up all the new units that the families couldn't buy. And actually, I did have a comment this week that someone says, well, if the investors or speculators weren't buying these places, the builders wouldn't have built them. And I said, well, if the builders or if the speculators and the investors hadn't have snapped them all up, the prices wouldn't be so high. So it's a double-edged sword there. You can't really say that. The land wouldn't be as expensive. The materials or the labor wouldn't be as expensive. There wouldn't have been that demand to drive up prices all around. So as I dove further down the rabbit hole, I said, let's get a bigger area. So I went to the GTA, and here is the map from the GTA. We have 10,400 listings for sale. And in the same map area, there is 12,672 places for rent. So right now in the GTA, there is more places for rent than is for sale, which is astounding to me. So of course, me being me, I have to go and get this raw data from the board and compare how many sales to how many leases and what's that ratio and how's it changed over the years. So here's the data. And in the red, we have the number of sales going back 10 years, and we have the number of leases in the blue. The sales have dropped off, and the actual number of leases has surpassed the number of sales. So right now in the GTA, there's more places leasing than there is selling, which is unfounded. This is the first time I've seen this, and I'd have to go back and check the data and pull it manually. But I don't think back in 1990s there would have been more leases than sales. This is a modern day phenomenon. And looking at this chart here, you can see where they cross paths. The light colored ones are the trend lines, but before that, they cross paths just around 2022 or before 2022. That is at that point where we technically became a nation of renters. And this is where we're at. People can't afford to buy. They can't afford to rent either, but renting is still cheaper than buying because of the run up in prices, and interest rates obviously play a role in that. But the people like to blame interest rates for the cost of housing primarily, where it's not interest rates. Interest rates impact it, but it's the price of homes, which is the biggest impact. So anyone that claims, well, affordability will come back when interest rates come down, that's an ignorant statement, because affordability comes back when prices come down. So again, this all ties back into the same story I've been pitching for years now, that the reason there was no supply was because of excess demand from investors and speculators. And you can see based on this data that they have bought up all the listings. There's now more places for lease than for sale. And here's one more chart I want to talk about, actually. This is the ratio of leased properties to the new listing ratio. So it's kind of like the sale to new listing ratio when it comes to sales. This is for leases. So to quickly explain this chart, this is a ratio. This is a market balance. So when the chart's high above 80%, it means that it's relatively a tight market. There's lots of places leasing, but not tons of places for lease. When you're at the bottom of the chart here, it means there's lots of places for lease, so lots of listings, and not as many people leasing, or maybe there's just too many listings. So from the previous chart, you saw that leasing has never been higher in the GTA, but the number of listings is even higher. So the number of listings, we're at record number of people leasing properties. More people are leasing than buying properties. But at the same time, we have even more inventory. The only other time this ratio was lower than it is now, especially for the GTA in the red here, was in April 2020, when people were fleeing the GTA to go to more suburban areas during the pandemic because of the deadly virus. There was, again, tons of listings compared to the number of tenants looking to lease. Now we have tons of tenants leasing, but even more listings. So it just goes to show you our markets are flooded with places for lease. And of course, people can't afford homes to buy because the investors and speculators bought them all up, drove up the prices, and this is where we are. Let me know what you think in the comments if you've seen a lot more places in your neighborhood for lease or for rent, and what you think about the situation. Now we're going to get into some quick statistics from across the country for the month of December. So the month over month changes by region. So Fraser Valley had the biggest decline out of the regions included this week. And by the way, there's a lot of places in Ontario that didn't have more than 100 sales. And if they don't have more than 100 sales, I'm not including them because it just skews the data and it's not very accurate at that point. We need a lot more than 100 sales. So anyway, a lot of places that won't be included, but most of the major places are included here. Durham region down 4% month over month. York region down 4% month over month. Niagara region, Toronto, Greater Vancouver, and Windsor, Essex, prices are down between 3 and 3.5%, or around that 3% mark. Then you have Saskatchewan and the province of Quebec. No change there. No change really in Hamilton, Burlington, Ottawa, very little change. Calgary, very little change. Nova Scotia up 1%. Montreal 1.2, Edmonton 1.4, Victoria 2.1, Newfoundland and Labrador up 2.6 month over month. London and St. Thomas 3.3%, Barrie and District 4.3, Oakville, Milton up 8.5%, Southern Georgian Bay up 10%, and Chilliwack and District up 13.3% month over month. Again, not a lot of sales at this time of year, so the averages get really skewed. So we're seeing some big increases in a few places, but I'm sure that's going to change in January once more sales happen. So overall, from the peak, the percent gain or loss, or all losses in this case from the peak, Durham region leads the way with almost 30% losses from the peak. Next, Windsor, Essex, down almost 30% again. Kitchener-Waterloo down 26.3. Southern Georgian Bay, 25.9. Fraser Valley, 25, just over 25%. Barrie and District, 25%. London, St. Thomas, almost 25%. Niagara region, 24%. Peel region, 23%. Hamilton, Burlington, down 23%. Bunch of places below 20%. York region, Ottawa, Toronto, Oakville, Milton, Victoria, Chilliwack and District, down the line, right? Losses get smaller. All the way down to Newfoundland and Labrador has fared the best from the peak. They're almost at peak pricing, actually, down only 1.6%. Little to gain, little to lose there in Newfoundland and Labrador. And looking at that in terms of dollar amounts, Durham region down $367,000. I actually had to go check the math on this to make sure I was right, but yes, they are down 367 from the February peak in 2022, which is huge. They're going to be approaching 400,000 in no time. Fraser Valley down 324,000, Peel down 310,000, York 309, Southern Georgian Bay 288, Kitchener-Waterloo down 264,000. Barrie and District down 254,000, and the big losses all the way down. Look at them: 242 in Hamilton, Burlington, Oakville, Milton down 223, which isn't a lot for that region actually. Niagara region down 208, Windsor, Essex down 206, London, St. Thomas down 201. Same with Toronto, down $201,000 from the peak. Victoria down 148,000. Ottawa down 125,000, Chilliwack and District down 117,000, Greater Vancouver down 84,000. Not a lot for that area, but they are down. Nova Scotia down 52 grand from the peak. Greater Edmonton 32,000, Saskatchewan 30,000, Province of Quebec 27,000, Montreal down 22,000. Calgary down 12,000, and Newfoundland and Labrador only down $5,000. Actually, I do have to say, it looks like Montreal and the province of Quebec, they have been like the most stable throughout this whole time. Yeah, they're still down from the peak, and I believe their prices are still inflated, but I've seen the most stability from that area out of all the places in Canada. Anyway, that's it for this week. Let me know what you think in the comments as always, and I'll see you next time.